Hello again, everybody. It is Wes with Pikes Peak Trades, and this is video 3 of the weekend, culminating the week of trading that ended March 19th, 2021. And this is the metals and miners video. And after a 2-week break, I think we're at a critical point where I really want to make sure that I share some important information with you. I think we are so very close to a big breakout in metals and miners. And as I've been talking about really over the last couple months, we need to see a slowing in the rate of decline of bond pressure, which of course means we also need to see a slowing in the rate of increase of interest rates. And those nominal yields need to slow and then reverse. And we're looking here at the 10-year Treasury note. And is it possible that we put in a potential double bottom low? So this would be one catalyst that would really fuel metals and miners. And also it would fuel growth in tech stocks as well. So if you've been watching the Stocks A to Z videos, you've been seeing that the bullish setups are there. And especially for the metals and miners, we need to see this type of reversal in bonds and interest rates. Also, we've been talking quite a bit about how the US dollar must be part of the equation. And here we have this possibly a measured move indicating dollar strength, but I'm actually calling this possibly the end of a move up and anticipating into the summer, maybe into the end of the summer and the fall, that we see continued weakness here in the US dollar. Take you into the daily and a slight update on the internals of this count, requiring, because this wave 4 moved into this low where my cursor is, a change to an expanded flat, which actually does count better internally and make sure that we don't have any overlapping waves on this proposed last wave down. You're going to notice off this parallel bull channel, it is basically right at the top. And so the anticipation is that instead of a breakout of bullishness of the US dollar, we're actually going to see a breakdown. So we'll see a breakdown here from the top. We'll see these MAs fail. And I think we won't get to this lowest part of the channel, but I think getting back to the mid channel, right here in the 85 to 87 range for the US dollar, would certainly just be another catalyst. Okay, so let's take a look at gold's weekly. And I got to point this out to you. GLD, the proxy here for gold, has put in back-to-back positive weeks. 2 back-to-back green weeks has not happened since the very early part of December. So we've got a little bit of positive traction, just bottoming out really nicely here at the lowest part of this potential bull flag, which you can see is really wide. There's a ton of room to run up within it, but of course, challenging that top and breaking above it is the key to the gold bug's very ambitious upside targets. We take a look into the daily, and of course, I always will hesitate based on the recent bearishness of gold of establishing a new uptrending channel. But is it possible that we're seeing a 1-2-1-2 count in GLD into the small time frames? You can see a 1-2, possibly a 1-2, and that would be the fuel to propel it to close this selling gap, invalidate a few of these bearish markers, and try to get it into a nested count to get it to challenge the top of this channel. So the rough projection would be that if this plays out bullishly, that perhaps by the end of April, that we could see GLD challenging the top of the channel before maybe another pullback within it, before we could actually try to break up and out. One other very positive development is noticing some continued movement above the 8-day EMA. If you scan back through, that really hasn't happened since December when we had what looked to be a false breakout. This is the one that actually needs to stick. Okay, we get into SLV, and I had tweeted this out earlier this week. This massive 8-month consolidation range. They say The bigger the base, the bigger the breakout, and we have massive basing in SLV. Perhaps you also paid attention a little bit to what happened with OPEX week. There was the highest number ever of expiring monthly call options in SLV. Roughly 95% of those expired worthless. I am optimistic with those now off the books, with that leverage out of the way and some speculation that those traders did not again load up long, that we might actually be able to use that consolidation in the end of that period as a springboard to launch SLV into a really, really strong bullish move. So you can see that it closed the week up and it closed just above the 8-week EMA. And if we could just get a launch right past that pivot in the mid 25s up through 27, I then think we could see rapid price appreciation in silver. So we look into that consolidation here. This is a 9-day period of consolidation. It's now above the 8-day EMA, right beneath the 21 and the 50. A break out of that box could lead to a massive move. And I am here speculating that eventually that this would be a more than 50% move into the summer. We look into the short term. There again is that consolidating box. Now, of course, it's possible that we move back down and we test the bottom side before we get that upside breakout. It is above that 200 period MA. This is actually, the 50 period hourly MA, which does roughly correspond to a 2-day moving average, which is what I like for swing trades. The suggestion would be if that could continue to hold, we get up if there's a back test, take an entry, because look at the aggressive upside targets. Okay, very positive developments in gold miners. So looking at GDX, we've got GDX now back above its mid-channel. So our miners leading here the metals. Now, of course, there's a possibility that we move back below it. That is my alternate count. I'm seeing the potential just of a continued run right up to the top of that channel that would take GLD to about 36 before it challenges this really, really important. This is a couple decades old of a horizontal pivot at about 39. So we get into the short term, and you're going to see I'm really optimistic that this aggressive bull channel can hold. It is channeling and counting extremely well, and the suggestion is that we are in the middle of a 3 of 3 of 3. And we know that that's the most bullish Elliott wave potential. So the setups that I'm showing you here are matching what I'm projecting for stocks in general. If we do get resolution, I think it will be across the board in all sectors. And what would be the fuel again? We have a slowing or a reversing of nominal yields on treasuries that would propel a bond bid, that would actually create more confidence in the markets and allow money to flow back into metals, miners, and especially growth and tech stocks. Let's take a look now at some individual names. So you are going to see very, very healthy weekly charts on these 4 big name silver miners that I like to use as just kind of the general proxy for the health of the silver miners. And we just see some sideways consolidation here in AG. We're just basing all the way above these MAs, right beneath some important horizontal pivots. Again, I have this within an intermediate of primary 3. This is a very, very bullish sequence for it to be in. We see basing. I'm hoping just consolidation right at the 8 and the 21 EMAs. And could that be the launching board to get it back to start challenging 19, 20, and eventually that spike high from the early part of Feb, and even that high right there at the early week of Feb. So let's look at CDE, at core mining. I again have this in a very bullish progression. I have this within a minor three, of intermediate three, of primary three, of a cycle three. We are talking about nested Elliott wave bullishness. So my anticipation, if these projections play out, this sector will be the outperforming sector that you would want to be positioned here and back into growth in tech. I think there would be a slowing of momentum in industrials and financials, and most likely small caps would not continue to outperform to the degree they have. We see upside targets, and yes, the possibility is there of 100% plus moves in these names. I like the movement back to challenge some of these important pivots above all of its weekly moving averages. Into the daily, we're going to see a gaining again of this downward sloping rail, which is decades old. It's been the same site of 1, 2, 3 failed breakouts. This needs to be the one that sticks. A little bit of back testing would be fine. That would be a great place for some fresh entry. This is the wave count where we really need to see some explosive moves. FSM, just like SLV, Fortuna, look at this consolidation. We're talking 8 months of consolidation. In this bull flag, a 2-month bull flag here, did we just see a pop out? Basing itself beneath this really important long-term horizontal pivot. This is the springboard we need to see FSM give itself the possibility of a 100% move. You'll see that potential move out and back test of that bull flag here on the daily chart, just right there above its important MAs, right at the 8 and the 21, I think ready for a big move up. Last one we'll look at here in this space is Hecla. Hecla had put in a great week, March 8 through 12, and quiet this week, completely flat. Now, that kind of a concerning candle, that might actually be a little bit of a gravestone doji candle. So we might see some early weakness in this name, but it's also possible, you don't read too much into that, and this just top ticked the top rail, and we're ready for an explosive move out of this bull flag. So taking you into the daily, you're going to see that active flag 1, 2, 3 touches right at the 8 and 21 EMAs. Could it pull back a little bit? Certainly could. We could maybe find a 1, 2, 3, 4, 5 up with a little bit of rest, perhaps back to the 21 EMA, but it is in position to move up and out here into its very, very bullish progression. So I think the evidence is lining up for a projection that we are close. I do think that we are possibly within the week of a significant breakout. It'll be really interesting to see what happens when futures open Sunday night Eastern time, and whether or not paper shorting futures are able to suppress the price anymore. My optimism is that we will see a reversal in those nominal yields, that we will see a weakening again and resumption of a downtrend in the US dollar. Couple that together with a breakout in the general stock market that could really, really be the fuel for, I think, a very, very exciting potential 3 to 4 month run in metals and miners.